You're looking at a daily chart of the Nasdaq. Welcome to my review. You're looking at this index here where it had a day 13 follow through day. You know, the most effective follow through days are days 4 through 7. But right here last Wednesday, Thursday and Friday, we had a nice little rally here. Got a little extended, a little overheated, a little overbought, whatever you want to call it. And it pulled back to its 10 EMA. You can see it bounced off the 10 EMA and now it's came back. Now the 10 EMA is a lot higher because, the index is in a power trend here, and you can see the 10, 21, and 50 are trading higher. So it's at a higher level, but I want to see if it finds support there. One thing that disappoints me, well, there's a few things that I'm concerned with, is it couldn't take out the 12,269 from February 2nd, and the market internals are really weak. This is not like January where the market internals were strong every day. So that is concerning, late day follow through day, the leading stocks not performing well, and the market internals are bad, can't take out new highs, a lot of negatives here. But if you just take a step back and look at, a bigger picture here, this is the Nasdaq from last, spring, and it's at 12,320. Cannot get above that level. What I'm saying here is it's just in a trade range. There is the 10.5. Yeah, it went below it, but pretty much a trade range there. And since you could just draw a line right here at 11,000 right through it, and it's just kind of been in this range for a long time, Sure, it goes above 11, goes below it, goes above it, below it. Little rally, little fail. This is a nice retest here of the low. Had the January rally, give half of it back, and now we have this other little rally, but it's still in this trade range here, and it needs to break above this level here and start making new highs. So what I'm looking for is for it to get support here at this 10 EMA, or even the 21. If it pulls back to the 21, whatever, you always got to go down to jump up, just like a high jumper, right? Or a basketball player, they run, then they coil, and then they jump. So it's pulling back. Maybe it'll find support here and take out this old high from February 2nd. Anyway, that's enough with the Nasdaq. I want to take a look at some of the damage, in these stocks that are kind of underlying here, because there's been a lot of damage. And I'm not going to even touch the bank stocks, but this is a commercial services leasing stock, United Rentals. Sliced it's 50, and this is why I have a rule of selling at when my stock slices to 50, it's a sell. And if you would have done it on United Rental instead of hanging on and hoping that it comes back. So on this day when it slices 50, say you sell it at 420 or whatever, 415, the next day it goes back to 425 and gives you hope, but it can't get back above the 50. So from 420 back to whatever it is, 351, you could have saved yourself $70 there just by having a rule. It looks like it wants to flirt with the 200 here now, but there's just a lot of these stocks that are showing damage. I'm going through the commercial services leasing. They're trading like bank stocks. And I know that lending is going to be tighter because of the financial situation. And the economy is slowing. Those all the rate hikes from last year are starting to kick in and slow down the economy. I mean, people are still working, but it is slowing. I think the market is a little bit, doesn't trust the Fed to do the right thing. The Fed's still talking hawkishly, and the market wants it to be a little more dovish here and recognize that the economy's weakening and these banks are a problem and lending's going to be tighter. So Ryder is another one. HEES is in this group. Back to the 200. They all look like they want to go back to the 200. Anyway, let's take a look at the steel stocks. STLD was one of our leaders. Like I say, once they slice to 50, it slices to 50 like a waterfall, like in a couple of days. Then it takes weeks for it to rally back up to a moving average, and that's when it's a good short and gets pushed back down. So this is just a weak stock, selling off on volume and rallying on this light stuff. New core, same thing. These steel stocks are getting hammered. Trades down, slices of 50, it takes just a couple days to go down huge, and then takes weeks for it to get back to its moving average, and then just gets pushed down. These are all the same. Cleveland Cliffs, just weakness. Some of the machinery stocks, more weakness here. I guess this is a demand issue. If there's going to be a slowdown in the economy, this is Manitowoc. machine. Here's a construction mining stock, Terex, slices to 50. Weekly rallies up to moving averages, gets slaughtered again. And that's what happens. Once they slice the moving average, look at how quickly that water falls. Takes weeks with weak volume to get back to the moving average, and then they just slam it down today, down 6% with heavy volume. That's CNHI. There's just a bunch of them. Caterpillar is a big one. Machinery, construction, sliced. It's 50, went right down to its 200. Took a few weeks to get back up to moving average, and it gets pushed down again. These all look the same. A lot of damage here. This is John Deere, was consolidating in a base, and now it's broken below the baseline. So Deere looks weak. Anyway, now when the Nasdaq, it's down 2% this week, you got to expect your growth stocks to correct, 2 or 3 times the index. So if your stock is down, 4 to 5 to 6% this week, that's expected in a growth stock, with the index showing the weakness this week. So I want to just take a couple look at a couple leaders. This is PERI on this week. It's up more than 2%. That's what you want to see on a strong stock, right? Holding its gains, not giving much back. Novo Nordisk down, it's pretty much flat on the week. So it's holding its gains. TGTX got good news last week, not much of a response, but this week it's up 4.4%. So that's showing strength as well. SMCI, we know what a leader this one has been since last summer when we were on this thing, and it's now up, 1.39% this week. So that's what you want to see, just stocks holding gains, not giving it all back, trending along with its moving averages. This one is up 1.14%. This is LNTH, the medical product stock. We even got a oil and gas stock here, a machinery equipment stock up, flat on the week. That's what you want to see. Lululemon, they reported earnings last week, and it's forming a nice base here, flat on the week. That's what you want to see with your stocks. Even stocks like CROX, yeah, they're down a little bit, 2%, but still, consolidating a base here, and that looks good. ELF, again, the sprinter needs a little rest every now and again, and it's down 2%, along with the Nasdaq. So that's not anything extreme. Iridium, another one down 1.5%, consolidating in a little flat base there. So that one looks good. So there's a lot of stocks that are holding up okay. They're not giving it all back. But what is doing well is gold. That's a little concerning to me. When gold does well, usually the market growth stocks has a little bit of a problem. This one's had it on our watch list for obvious reasons, and it's up 6% this week. So, this one's showing a lot of strength. GFI was on our watch list, but then it blasted out of a base, and that's when you just got to say, see you later. This one's gapping higher. AU is another gold stock that's just, that one's gone, set up in the base, didn't even form a handle. It's just see you later. Goodbye. Anyway, GLD is one of the exchange traded funds, if you want to play gold that way. This one looks strong as well, and set up. So and the utility stocks, more strength in utility. Blah, I don't want to buy these, but you got to recognize strength. This one's up 2.6% this week. PCG, which is a PG&E, which is the Northern California, it's up 2% this week. So utilities are strong. And lastly, I got to finish with the food stocks. General Mills, this one's up 2% this week, forming a base. Actually looks good, man, but these things are getting a little stretched, I got to tell you. There it is on the daily. That actually looks pretty good. Campbell's did well in the teen survey because of the goldfish, I guess. Anyway, this one's set up in a base as well, but they're getting a little stretched, and by that I mean, normally they trade at certain, price to earnings. These are value stocks, and they trade at certain value, and they're getting a little bit extended. Kraft Heinz, not so much. Still a 14 PE. and it's still trading tight here in a base. That one actually looks pretty decent. But I'm going to close on Hershey because who doesn't like a chocolate bar? This thing's making new highs. This guy's ballistic. This is a leader of the market. When you have a leader like this, you know it's pretty defensive. Yeah, the yield's now down to 1.6, but you could see lower left, upper right. This thing is just going ballistic. A parabolic move for the chocolate bar, up 2% this week. But what I wanted to show you was the PE is over 30 now. I mean, this thing's trading like a software stock. Anyway, that's it. Hershey's fine. It's just a little extended. Those things are getting a little stretched. It's just investors being a little defensive, and that's really not a good sign for our growth stocks. But we're going to hang in there. We're going to stick with the rally, and hopefully it finds support. And tomorrow is the last day of the trading week, Thursday, and the market is off on Friday. It's closed. And so I expect probably a quiet day tomorrow, and earnings week starts next week. Anyway, have a good evening. Thank you for watching. We never give up.